Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most? And do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right, no extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
All right, welcome to The Wealth Flow. My guest today is Ladisla Maurice. He is also known as the Wandering Investor. I am looking forward to today's conversation.
How you doing, Keith?
Welcome. Yeah, pretty good. If we could maybe start with your story, your background, kind of where you grew up, and what eventually led you to investing.
Sure. So I graduated from college having studied business in Canada and then went to grad school in Australia for law and for essentially business law. And my first job straight out of university was working at Nestle headquarters in Switzerland. And then within 3 months, they sent me over to Africa. So I spent actually most of my 20s in Africa. And my last role there was managing the dairy business for a few West African countries. I was based in Ghana, in charge of the dairy business for Ghana, Ivory Coast, Sierra Leone, and Liberia. So my 20s were very atypical. I had a corporate experience all over Africa, essentially.
Yeah,
that's... At the age of 30, I figured I didn't just want to do corporate in Africa. I wanted a new challenge. I wanted to work for a new company. My plan initially was to move to Dubai and look for new opportunities there. But before doing this, I wanted to just take a break. So I went on a road trip, and my parents were retiring at the same time. So together we went on a road trip from Oman to Paris by car.
Oh, wow.
So we drove into the UAE, we put the car on a ferry, drove into Iran, drove all across Iran, went into Armenia, Georgia, crossed all of Turkey, went into Greece, up to Ukraine, and then Paris. And at that point, I was 30, and it was the first time that I had two things going on at the same time, which are namely money. Right. I had worked on a Swiss contract as an expat in Africa for a bunch of years. So I had a bunch of savings and a lot of time. Because, typically when you're young, you have time but no money, but you're old, you have,
That's right.
You have money, but you have no time. So I had these two things at the same time, which was actually quite wonderful. And on this trip, I was, we'd arrive in random cities and capital cities, and we'd get an Airbnb for, a week, and I would just wander around, and I'd go look at real estate agencies. I'd, go talk to lawyers. I'd meet expats. I'd go to meetups. And I just saw so much value in some of these countries. So I started buying real estate, and I started operating my first flips. And I essentially never went back to looking for a job in Dubai. Now I've been doing this for almost a decade, where I travel around the world full time. I manage my own money. I invest primarily in emerging markets, real estate, private equity, venture capital, some stocks as well, a bit of everything, depending on where the opportunities are. And after a few years of doing this, I had some of my friends who were just asking me when I was still posting on Facebook, when it was still a thing, Ladisla, it's like, you're in all these weird countries, but you don't seem to have a job. Like, what is it that you do? So I started a blog. I started writing about my experience. Also
Yeah.
seeing that a lot of these countries are very data poor. So it's not like investing in the US where you have Zillow and all these, all these like investment reports and all these analysts and all of that. In all these countries, there's literally no data. So when you look online, there's nothing. So I saw that there's a gap in the market because I suffered from that gap. Like when I was looking for information, there was barely anything. So I would write my analysis on these markets, having spent time on the ground. And then gradually people started getting in touch with me, asking me questions. And then, just turned into a business, The Wandering Investor, where we now help people internationalize and diversify. So obtain second residencies, passports, invest in international real estate, all of that.
Wow, that's incredible. It really is. And so let me maybe go back to kind of your growing up. You did this road trip with your parents after leaving Africa, right about the same time that they're retiring. Did When you were a child, did you travel a lot? Is that something that you got from your parents, or
It is.
okay?
So I grew up primarily in Canada, France, Germany, and Armenia. My father was a university professor and he'd take gigs teaching at different universities. So I just tag along. So from a
Okay,
young
okay.
age, I was traveling.
So yeah, so that part, because that's a fear in itself for a lot of people, just that they haven't done it, right? Even myself growing up, we traveled around the U.S. quite a bit, but it wasn't until later in life that I started traveling abroad, and I fell in love with it after having that experience. But it sounds like you already had that to begin with, and what a road trip! I would love to hear a little bit more about that. I've watched different things about traveling through Iran and different, it used to be a kind of a common thing to do. Now, there's, I'm sure a lot of the audience that would say, I'm not sure I would want to necessarily do that, but what a tremendous experience.
Yeah, I wouldn't recommend it if you're on a US passport for sure.
Okay.
US people get treated differently in Iran.
Okay.
It's more complicated to travel as a US person. On a
Sure.
European passport, it's fine.
Okay. Okay. And so tell me a little bit about so you left this job and you were able to pack away a little bit of money. So you had the money, you had the time, and you said you started to look at potentially investing in some real estate, talking to attorneys, talking to real estate folks at various places. Where was the first country that you decided to invest?
The So I was already investing in real estate internationally before this. I had
Okay.
bought in the US in 2013 when prices were still quite down from the great financial crisis.
Hmm.
And I had made my first investments as well in Austria and in Hungary. So by the time I left, I already had experience with international real estate. Um, and then I just started, buying up in more in Hungary and in other countries as well.
Okay. No, so on the U.S. property and then maybe the Austria and Hungary, what type of, I heard you say flip for a minute there, but what type of properties were you buying? Was this primarily residential? And was it to basically buy one, fix it up, and put it back on the market, or
In
any
those
long-term
markets,
rental?
no. In the US, it's just buy, hold, sell later on, just single
Okay.
family home. Austria and Hungary also, I just bought apartments, some of which I renovated and then kept for a few years.
Okay. Fantastic. And so on those, were those cash flow plays or appreciation, or what
Both.
was kind of both? Okay.
Yeah, both. Yeah. Yeah. When you catch a market that's just about to, just taking off, you can play both essentially.
Yeah. Yeah. Okay. And did you do traditional rental, or was any of it short-term rental? What did that?
It depends. Some long term, some short term. Look, the way I operate is I have a map of the world in my head, and
Hmm.
I'm constantly reading about macroeconomics and politics, the like. And then I'll see a country with an interesting story, with interesting potential, and I'll essentially just go there and I'll see how do I play it. because it's not like most emerging markets are not like the US, where there are just so many things to invest in. A lot of these countries are actually quite limited. So I remember like 7, 8 years ago, I went to Uzbekistan in Central Asia because the country was opening up. They had had a communist dictator since forever. The guy never left after the Soviet Union broke up. He was still there. He died, and then some new guy took power and started rolling out the red carpet to foreign investors. And Uzbekistan is the country in Central Asia with the biggest population, more so than Kazakhstan, which people are quite familiar with. So I went there. My thinking was initially, just as the reforms were starting, my thinking was to buy real estate initially in the center. And sure, it was possible, but there were a bunch of restrictions. You can buy real estate as a foreigner, but you couldn't really rent it out. People were doing it, getting away with it. Generally speaking, I'm quite comfortable with ambiguity, but in this particular situation, there was just way too much ambiguity. So I started looking around for other opportunities in the country. And then I came across a local stock market. And there were companies there that had zero debt on their balance sheets, that were growing 30-40% a year, and that were spitting out dividend yields of 20%.
Really? Wow.
Had like P ratios of like 3 and 4. So, I went to Uzbekistan thinking I'd buy real estate. I left with a brokerage account.
Yeah.
So essentially, that's my methodology. Sometimes I'll go to a country. I remember a few years ago, I went to Serbia because it was between East and West. And, there's that tension, but in a positive sense from an economic point of view, because everyone is just investing there. And I wanted to play it, but real estate was already expensive. I thought it was just bad value for money. I was wrong with hindsight because prices went up even more, like doubled since then, even though prices were really expensive back then. Now they're completely out of whack. And I looked at the local stock market, but there are just too many imbecile restrictions. So for example, if you buy a stock and you sell it, you can't get your money until you file yearly income tax and pay your capital gains on it.
That is crazy, yeah.
Insane stuff. So you see this, you're like, no, this is really not investable. So it depends. And that's how I operate. I just go around the whole world to places I find that are interesting. And then I figure out on the ground, how do I play this? And can I play this?
Yeah. It's an interesting approach. So you've got to, and so where are you getting most of your information when it comes to some of that and some of the research that you're doing?
Good question. I read a lot. A lot of reading.
Yeah.
I read a lot. Yeah. I read, a few hours a day.
Okay. And so tell me, I guess, a little bit about what you've learned in doing this. Obviously, you've learned that not every country is going to be a real estate play. Sometimes it's going to be the market. Have you invested in anything beyond the market and real estate when it comes to various countries?
Yeah, I've a bit of venture capital in some countries as well.
Okay.
Look, the key learning is, generally speaking, you're fine investing in most of the world, with exceptions, obviously. But in most cases, it's okay, right? Because when we're back in the US, back in Canada, we hear these horror stories of someone going into Mexico and then buying land, but then it turns out it's not. He didn't buy land, he got played and this and that. Generally speaking, if you go somewhere as a foreign investor and you hire a serious local law firm, I mean serious, you will be fine. So just don't cheap out when it comes to getting legal advice. I think that's the number one recommendation. And that's the number one mistake people make as well when they head out into emerging markets. A lot of people will, and these stories where people get played, it's typically they bought a house in Colombia, and it's their girlfriend's cousin that was the lawyer and he didn't know the rules, and blah, blah. It's just, look, just hire an external lawyer, one that's recommended by the U.S. Embassy. It'll be a bit more expensive, but at least you'll be fine. Just look at the Canadian Embassy, British High Commission, French Embassy, U.S. Embassy. They all have recommendations of law firms. And these generally, yes, they're more expensive, but, they're professional. And most importantly, they understand the issues that foreign investors have. Because you can go to a local lawyer. I mean, just let's think of, Keith, you're the lawyer in your town, wherever it is you live, that does whatever. Some random Chinese guy comes up to him and wants to buy this and bring money from China, and it's going to go through an entity in Singapore, and he wants to invest as a non-resident alien. He's not really going to know. There's so many things that could go wrong. Doesn't mean he's a bad lawyer. It's just he doesn't understand foreign investors and their issues. So when you go overseas, get lawyers that understand foreign investors and their issues, because it's a specialty. So I think that's my number one piece of advice.
No, that's great. And I've heard at least twice on this show that, the most expensive attorney is a cheap attorney, right? So ultimately, it's going to end up costing you more in the long run. So no, that's great advice. And I love the recommendation of checking with the U.S. Embassy to kind of see who they recommend. I think that makes
once you do this, then you're generally fine. I've invested in countries in Africa a few years after Civil War, and it's fine. I had my title deed and I did my business. I, got in and got out, all good, no issues.
Yeah. Now, do you look at, obviously every country is different in, the way that you can own the property. And so is that something that you take into consideration? Is there anything that you stay away from when it comes to the ability to own it, or just are you pretty open-minded on that?
Yeah. So one, I'm very open-minded. Mm-hmm. Some countries I just buy in my own personal name.
Okay.
I know this sounds insane to Americans. It's like, oh my God, he bought real estate in his own name. What happens if he gets sued?
Yeah.
People do not have, in 99% of the world, people do not have this culture of suing everyone and anyone over nonsense. Let's be clear. I'll give you an example. I have a property in Montenegro. I was selling it for a while. And I had a guy that contacted me, some guy from California, I think from California. He was a US guy, an American guy, and he wanted to view it. And we chatted on video, and the person that has the keys wasn't around, and I wasn't around, but he looked all right. So I just told him, look, this is where I hide the key. So go, walk yourself around and have a look and just put the key back where you found it. So we operated this way. A few hours later, he calls me. He's completely wet. I'm like, what happened? He's like, I fell in your river.
Oh my gosh.
So there's a river on the property and somehow he fell into the river. And my initial reaction was just to laugh. And he was surprised. Because in the US, imagine someone wants to view your house, you just let them, and then they fall in your river. You're getting sued.
Right.
Like if he went to the police and he tried to press charges, the police would just tell him to just F off. Like literally just like, you're stupid, you fell in the river. Like just get out of here. So in your own name is fine in a lot of countries. Using local structures, sometimes it depends, whether it makes sense from a tax point of view. Sometimes using a foundation or a trust. Some countries you have to. What I'm a little bit more wary of is countries where you have a very specific lease. So you don't own the property, but all you have is a lease. And then there are different types of leases. So in Kenya, for example, it's typically a 50 or 99-year lease with the government. But essentially, if you buy there 10 years before it expires, you just need to file paperwork and pay some tax. Like the lease renewal is automatic. Essentially, it's just structured so that the government can tax you a bit more, which is fine. Yeah. In other countries, typically in Bali and Indonesia, a lot of people do this. They buy real estate, but it has like a 20-year lease. And after the 20 years, it literally reverts back to the owner of the land. So you buy land on a 30-year lease, you build a villa, but after 30 years, that villa is going straight to the to the owner of the land unless he wants to renew. But then, I mean, then you have no bargaining power, right? So that I'm a little bit wary of. I mean, I'm not saying you shouldn't do it. It's fine. You just really need to bake in heavy depreciation into your numbers. I mean, because it's running to a zero effectively in 30 years and fast, right? Because no one's going to want to buy a property with 3 years left on a lease and pay and do all the paperwork and this and that, like, registration fees. And so the depreciation is actually front loaded in many cases.
Yeah. Okay. No, that's very interesting. And then when it comes to doing some of those type of investments, what's your portfolio look like right now? I mean, are you holding on to a lot of these, or are a lot of these you already have an exit strategy planned?
It depends. I go into every investment being very open-minded. Okay. Is it a flip? Is it a long-term hold? Am I just going to keep it for 3 to 5 years? It depends. But roughly, I think my portfolio is about 40% real estate, 40% international stocks, 20% others, including physical precious metals, some private equity investments, a bit of crypto.
Okay. And what about when you are investing in these other markets? What type of a transaction are you doing? I mean, are you acquiring loans over there? Is there debt? Are you able to leverage any of this?
Typically, no. In a lot of these markets, debt is a lot harder to obtain, if not nearly impossible. But what it also means is that it's more conservative in the sense that you buy into markets that are not levered. So you're paying the actual price of real estate, because when you look at real estate in Canada or in the US, people look at a house and say, oh, it's a real asset. It's a hard asset. My house is worth $700,000. And sure, but actually not really, because the housing market has been so financialized. What you have is part hard asset, part financial asset. Because interest rates go up, the price of your house will go down 30, 40, 50%. If suddenly we're to raise rates to 15%, what would happen to the housing market? So it just shows that's not entirely a hard asset anymore. It's part financial asset. In a lot of these emerging markets where there is no leverage in the system, rates are at 15%. That's it. Whether they go from 15 to 30 doesn't change a thing. But if they ever do go down to 6 or 5, then watch prices go up. So you have limited downside in many cases, unless the country as a whole goes belly up, which happens once in a while.
Yeah, for sure. And are there any, and so on most of these, say the real estate investments that you're doing, are these mainly like a single family, like an apartment somewhere, or are you doing any type of commercial or multifamily?
For a bit of multifamily, mostly apartments, sometimes homes.
Okay. Fantastic. And tell me an example of what are some of the areas that I don't know if they're necessarily overlooked, maybe they're just undiscovered by most investors, but what are some spots that you're really bullish on and say this is a great place to potentially invest? And then maybe as part of that, maybe you can mention some areas too that there's some additional benefit beyond just what you're earning by investing in that country.
Look, I like to tell my US clients that they should manage their expectations. The reality is, with the ease of access to credit and the diversity in the US of markets and micro markets, there is always a market somewhere in the US that's going to be an amazing investment, especially when you look at the fact that you can buy up a whole bunch of stuff with only like 10 or 20% down, with like a fixed rate over 30 years. So I would tend to say, if you're purely focused on returns, And you don't want to deal with, because as soon as you go overseas, let's face it, you add a bit of complexity, right? And in a lot of these emerging markets, there's a bit more complexity. And then in terms of management, local management, the skills aren't going to be, it's rarely as professional as what you'll find in the US. Like, one of the great things about the US is it's just easy to get things done. Things are quick. And it doesn't matter in which town or city you invest, there's always a competent property manager. All right.
Yeah.
That's not always the case when you start investing in some of these other markets, right?
Yeah, I can imagine.
The guy will do an all right job. But if you're a perfectionist, you might actually go crazy, because he'll be all right, but he's not going to be perfect. So I'd say if you're looking purely for returns, there's probably something better in the US than what I can point you towards to. Now, what I help people with is diversification and internationalization. So it's about not having all of your eggs in a single basket.
Mm-hmm.
Which, when you think of it, is actually crazy. Like, why, especially if you start being worth like a few million, it's actually pretty crazy to have everything in a single jurisdiction. It's healthy to have a little bit in very different markets with drastically different dynamics. So there are a few things. One, you can make just pure investments. You can go into some countries. I mean, right now, I know that's like a bit of a stretch, but it's Kenya. I'm buying in Kenya. I bought a few apartments in Kenya. I'm about to buy more apartments in Kenya. The returns are interesting. I'm expecting between 8 to 10% net a year, just in terms of rental yields on some of these investments, and potential for capital appreciation. But, it comes with Kenya risk. It comes with Africa risk. People just need to be comfortable with that. Personally,
Yeah.
I lived in Africa. I'm comfortable with it. I understand that there's going to be volatility and this and that. But it's really cheap. It's nice real estate and it gives a good yield. I'm happy with that.
What are some examples? Like, how cheap are we talking when we're talking about investing in Kenya? Obviously, the market, just like everywhere else, there's going to be various prices, right?
Yeah.
But
So
just
I'll
for
give
like
you
an
an example.
apartment.
I bought some 1.5 bedroom apartments in the best neighborhood in Nairobi, the capital city of Kenya, like really the best neighborhood, close to the United Nations, 3-minute drive from the Marriott. That's that sort of area, green, close to a mall, but still walkable, relatively safe as well. So, and I paid for a 1.5 bedroom apartment. So essentially 1 bedroom plus study. I paid about less than $70,000. And the building is off plan, 2.5-year payment plan, Chinese developer, indoor swimming, heated swimming pool, parking, kids playroom, gym, the whole deal. So
Yeah.
am I expecting US build quality? Right? No, let's be clear. I'm not expecting the same finishings as in San Francisco or, Zurich in Switzerland. But I feel that for a capital city whose population is expected to almost double by 2050, and that is the economic hub, actually, and political hub of East Africa, in the best neighborhood, less than $70,000 for a 1.5 bedroom apartment, like right downtown. I don't feel like I'm overpaying.
Yeah.
Like, I really don't feel like I'm overpaying. And now I'm looking at properties on the coast, and I'm looking at a resort. I was having a conversation yesterday with the developer. I have an oral agreement that I'm going to buy with them. Actually, their list price is not finalized yet, but they showed me the average prices they're aiming for. And I'm looking at a 2-bedroom, 2-bathroom apartment with sea view in a resort with 3 swimming pools, 130 square meters of beach access, like beautiful Indian Ocean beach access. Like paddle court, pickle court, gym, like the whole deal. Ocean view, $220,000 roughly. And for an apartment that's 1,500 square feet.
Okay.
and
Okay.
and the balcony's so big I can put a jacuzzi.
Oh, nice.
So I mean, beachfront, you know,
Yeah. Yeah. For 220, not bad at all.
right? Like that's pretty enticing. Like that's pretty enticing. I don't know many countries in the world where you can get that, especially
Yeah.
in a country that's actually nice and pleasant and growing. But sure, it comes with volatility and it's off plan. And why is it so cheap? It's because there's no financing.
Yeah.
I'm the financing.
Yeah. Yeah.
You know, when you buy into that pre-construction, you're the financing. The developer has the plans, they have the permits, they're ready, and now they're like, we need money. It's like, okay, I'll buy pre-construction, but I'm gonna get this good price because they need your money.
Yeah.
So yeah. So
No,
Kenya's one.
makes
Another country that's quite interesting. Look, Colombia's a good one. You can get net yields of about 6-7% now in places like Medellin. The city's absolutely booming from a tourism point of view. It's a short flight away from the US. A lot of US investors are buying stuff there. I bought a penthouse myself. I'm really happy. Great returns.
I love
A beautiful
that's one I'm
property.
looking at as well.
Yeah.
My wife is Colombian, and we go to Medellin at least once a year, sometimes a couple times a year. So
Cool. So, you know, I don't need to sell Medellin to you, how pleasant it is and why it's booming, right? Why it's doing so well.
for sure.
I'd be happy to introduce you to my realtor there. He's great. He's managing my property, doing everything. Found me a really good deal. And then another one that is interesting from a real estate point of view is Paraguay. Paraguay between Brazil and Argentina. So I wouldn't say that the returns are spectacular. You're looking at maybe 4 to 6% net. The country's growing, low debt levels. It's a very low tax environment, in many ways quite libertarian. It's a place of business opportunities. A lot of people are moving there from Brazil, actually, because of the hellhole that Brazil is becoming from a tax point of view. People are leaving Argentina's instability. They're going to Paraguay. People are leaving Bolivia for Paraguay because it's more stable. A lot of Europeans and Canadians are moving to Paraguay to get tax residency there because if you structure things well, it's a zero tax environment. So US people, different. For you guys, it's, the taxes on worldwide income based on your citizenship and stuff. So a bit different. But a lot of people are moving there, and real estate is still very affordable. Again, prime neighborhoods, you are looking at about less than between $1,500 and $2,000 a square meter. So about, like 150 to $200 a square foot for new construction, rooftop swimming pool, the whole deal in the best neighborhood, like super walkable, close to the malls, all that. So, I mean, with essentially $80,000, you get a really nice bedroom with a, rooftop swimming pool.
Nice.
What's not to like, right? So a place like that is quite good. We've been helping people invest there. I have to say there's quite a lot of supply coming. Which is why we always say, don't try to be cheap. Just go for the best neighborhoods. Like, don't try to go into the outskirts and say 15%. Just stick to the core because that's where the demand is going to be. And then a classic is for Americans is Panama. It's right around the corner. We helped so many Americans get residency in Panama as they either moving there full time, but mostly as a plan B. So if you don't like the direction that your country is heading towards, so during the Biden years, there's a lot of Republicans. Now it's a lot of Democrats that are hedging their bets. Essentially, all you need to do is invest $200,000 in any real estate in Panama, and this gets you and your family residency. And then after 2 years, you can turn it into permanent residency. And all you need to do effectively is just go back to Panama once every 2 years to keep your residency active.
Okay.
Either that, or you do a term deposit of $200,000 in a Panamanian bank for 3 years. And also this gets you residency. And after 3 years, you can sell your real estate. You can remove the term deposit, send it back to the US, and you keep your permanent residency for life. Or you create a company and hire yourself. So, so if you're sitting on some cash in the US and a term deposit and like Chase or Bank of America, literally you just wire 200,000 from your Chase account to a Panamanian bank, file the paperwork, bring your documents for immigration, boom, you get residency. You're still making 4%, 4.5% a year. Collect your interest. After 3 years, you can send it back if you want. So just by shifting money,
Yeah, that's very
you get
interesting.
a free residency, right? Same thing with Turkey. Turkey, we've helped quite a few of our clients obtain citizenship in Turkey. I mean, this one's wild. You buy $400,000 of real estate anywhere in Turkey, and you get citizenship within a year for you and your family, for you and your spouse and children under the age of 18. So citizenship, like actual citizenship, a passport. And after 3 years, you can sell it. Or after 5 years, you can sell it and not pay local capital gains taxes. And you still remain a citizen. And in Istanbul, which is a massive city of between 15 and 20 million people, one of the centers of culture, really, in history, you can buy real estate relatively affordable. $200, $150 to $200 a square foot for secondary market. Not very pretty real estate. Let's be clear. It's not pretty real estate, but you'll buy in the best neighborhoods, some older apartments in areas that are less prone to earthquakes, because that is a factor in Istanbul specifically. And you'll be making net yields of about 5%. So, just buy real estate in a massive city. You find tenants in like a week, collect your rental income. After 3 to 5 years, you can sell it. You remain a citizen. And what's interesting with Turkey is all your future children will become Turkish as well. So if your kid gets naturalized Turkish through the Citizenship by Investment program, and he has kids, he just needs to register them at the Turkish embassy or consulate wherever they're born later on, and they'll be Turkish as well. So just by shifting $400,000 from whatever term deposit you have in the US to Turkey into real estate for 3 to 5 years, you are leaving a legacy of all your future descendants having Turkish citizenship, which objectively opens a world of opportunities. So,
For sure.
Keith, do you need Turkish citizenship? Probably not, right? But what's to say that in 50 years' time, your grandchildren might not want it, right? They might find a use case for it. Already, I mean, I can tell you, you get really cheap access to universities, and some of them have programs in English for medical school, for example. So, those are moves that leave a legacy.
Yeah, for sure. Yeah, that's very interesting. I've heard a lot of good things about Panama as well. Turkish, not as much, but that's one of those areas I have not been to Turkey, and that's one that's on my wife and I's list for sure. Definitely want to travel there. We've met quite a few people from Turkey, and they've all been really, really great people. So
they're great people until you do business with them. They're tough to do business with.
Are they?
It's a recurring theme in the Middle East. People are very friendly, but as soon as you start doing business with them, then it becomes tough.
Okay. Well, that's neat. And so are there some other, what are some other countries maybe that you can get the residency, the second passport, that kind of thing?
Yeah, so Egypt is another one where we help clients obtain citizenship. I mean, that's I generally recommend Turkey above Egypt because the Turkish passport is actually very decent. You can travel all over the emerging world with it. And, the market's more liquid and all that. It's just the yields are higher. It just makes more financial sense, and it makes more sense to get a Turkish passport. But for some people, Egypt works as well. Just invest $300,000 in any real estate in Egypt, apart from the Sinai, for obvious reasons, for security reasons there. So invest anywhere in Egypt, real estate, and some of it's really, really affordable. We're talking $60 per square foot of new construction with swimming pools and the whole deal. And
Oh, wow.
yeah, really affordable. And you'll get citizenship for you your underage children and up to 4 wives if you're Muslim.
Oh, wow. Hey, there we
If
go.
you're Christian, no, only 1 wife. But
Okay.
if you're Muslim, up to 4 wives. So that's also, it goes down the generation. So if later on you have kids, or your kids have kids, they just need to go to the Egyptian consulate or embassy and whatever, New York or DC, register them, and they'll be good. They'll be good to go. So
Yeah.
Egypt is another one. And yeah, I mean, there are all these other passports that we sell, that you can buy through making a donation. You've got citizenships in the Caribbean, like St. Kitts and Nevis, St. Lucia, Dominica. Those will typically be like a few $100,000. The latest one that we've been working with, that's actually, that one's really interesting. It's Sierra Leone in West Africa, $140,000, or $100,000 if you can show you have some Black DNA. And as a citizen of Sierra Leone, you can pay with crypto. All these, done entirely remotely. And as a citizen of Sierra Leone, you have access to all of West Africa to do business, because there's a union there, a bit like NAFTA, but the West African one, which is ECOWAS. So then you have full access to do business in Nigeria and Ghana, and all those like booming economies as a local, right? So, because in these countries, it's usually, I mean, I lived in West Africa. There are just so many business opportunities. But when you're a foreigner in these countries, the residency permits and this and that and like blah, blah, they it's just complicated. And there you effectively you're able to operate as a local. So, in a world of demographic decline, I mean, gosh, even India is going into like below replacement rate in terms of, fertility. And where the norm is, women having less than 2.1 children and a lot less. Africa stands out as the one continent that will be continuing to grow demographically over the coming decades. So having this call option on this demographic growth through having very easy access to the local markets is quite interesting. And we have family offices that do this as part of their family office operations. They just, buy passports in these countries, because as a legacy, they don't just want to leave a trust fund, but they also want to leave options to the family.
That's great. What about maybe shifting gears a little bit? What about from a market, stock market standpoint? Where are some places that you're investing where you're like, this really is one you shouldn't overlook? And then I guess the other piece to that puzzle would be, how easy is it? I mean, for somebody that's sitting in the U.S., how easy is it to invest in markets abroad?
Cool. Good question. I mean, the good thing about the US is that there are just so many ADRs and GDRs. So you look at the main companies that are listed in Latin America, most of them have, an ADR in the US, or indexes. So if you want to buy Brazil, there's a Brazil index, and the main Brazilian companies have ADRs in the US. So it's very easy. Once you start going into more remote places, like Thailand and Malaysia and the Philippines and stuff, where there isn't necessarily access on Interactive Brokers, which is, by the way, the best broker when it comes to investing internationally in the US, IB by far. I'm an affiliate, but there's no affiliate link here, but they're good. You can open brokerage accounts remotely pretty much everywhere.
Okay.
Right. So if you want Uzbekistan, you can do that. If you want Serbia, you can do that. If you want Rwanda, you can do that. If you want Nigeria, if you want Kenya, if you want Cambodia, you can open brokerage accounts pretty much everywhere in the world remotely. It's just, you just need to like literally go onto the webpage of the stock market of said country, and they'll typically have a list of brokers. You just contact 2 or 3 of them and you're like, I want to open remotely. And, out of the 3 you contact, maybe just 2 will respond. And then you just choose, whoever responded faster and seems to be more on the ball. And then you just, you fill out a bunch of paperwork. You might need to notarize some stuff, apostille, send a DHL, and then they'll be like, sure, here you go. And then you transfer money there. And then typically you can send your instructions per email, or they may or may not have a little platform that they give you access to. So that can all be done from home. It's just a bit of paperwork, but it's entirely doable.
Okay. And are there any specific, I guess all of them are dependent on what, index or potentially a company that you're investing in, just like it is here, as to, what to expect from a return standpoint. But
yeah, it really varies. Some markets that are quite interesting, I find, are a lot of markets in Africa. Actually, some of these companies are cheap. They have a lot of moat, and they're quite well run. And they have external auditors and all that, because corruption is a thing in a lot of these markets. Another market that's quite interesting is, again, this is not financial advice. This one's a volatile market, Colombia, because it looks like the current socialist president is on his way out. It looks like the center right may be coming to power. I mean, Keith, the story.
yeah.
Colombia is an interesting play. It's a volatile play, but it's an interesting play. Is it the sort of index fund I would buy and hold till I die? I don't think so. But it could be an interesting play for, a year or two.
Yeah, for sure.
But high risk, not investment advice.
Yeah. Well, no,
that's why real estate in many cases in these markets is just a bit safer, because it's just a whole lot less volatile.
Yeah.
If you start buying Colombian bank stocks, I mean, they can do 2-3x, and then also they can go down 80% on you. And no one will notice. Your Medellin penthouse will not do that.
Right. Yeah, for sure. Very interesting. This has been great. This has just been really cool. And so tell me a little bit about, where is your home base, or do you have one? And, obviously you're the wandering investor, but do you have somewhere where you are primarily most of the year, or are you pretty much just kind of, I guess, tell me a little bit more, Ladisla, what does the day-to-day look like for you, or the year-to-year?
I'm on the road a lot, where I am, all that. I'm all over. I'm really all over. I spend a lot of time in Latin America and a lot of time in the Balkans. So those are my main bases. So Balkans and Southern Europe and Latin America.
Okay. Fantastic.
And I travel with a lot with my wife and my 2 kids. So my daughter, by the time she was 1, she'd been on 25 flights.
Wow, that's amazing.
She's turning 3, and I think she's been to 30 or 35 countries already.
Oh my gosh.
Yeah.
Well, what an amazing life you're providing for them. So that's awesome.
That's fun. It's not always easy. Sometimes you end up in logistical nightmares.
I'm sure.
But yeah, it's good.
Well, why don't you tell the audience how they can find out more about you, if they'd like to connect, if they'd like to, follow you and potentially use your services for, investing abroad.
Sure. So the best thing is I have a newsletter on thewanderinginvestor.com. Every week I post about, where I've been, what I've been up to, some of my analysis, really focusing on residency, citizenship, and international real estate typically, and emerging markets, emerging market economies. There's a free ebook you can get, 12 mistakes to avoid when investing in international real estate. Some of these mistakes I made myself. So you get this free ebook, which, cost me, probably tens, if not hundreds of thousands of dollars in mistakes.
Right.
So learn from me. And then I also have a YouTube channel where I document a lot of what I do as well. The Wandering Investor.
Oh, that's great. How about I've got 2 other. First off, I've enjoyed this. This has been fantastic. I know the audience is going to get a lot out of it as well. I wanted to just ask you 2 other questions I ask every guest. One being just any advice you would give somebody who's maybe just starting out in their investment journey.
Be patient and be humble. Understand that you don't really know anything. We don't know anything. No one knows anything. All the talking, I don't know anything. All the talking heads talking with their opinions and all that. And I was like people really don't know that much, and nor do you. So I think that would be my advice to people starting off: is just be humble and understand that even if people are very confident in front of you, it doesn't mean that they actually know what they're talking about.
Yeah, no, I think that's great advice. It's kind of contrary to what you might hear, but I think there's a lot of truth to that. How about a book recommendation? It doesn't have to be real estate or investment related, but it certainly can be. Just something that you've read that's been impactful.
The Gulag Archipelago by the Russian philosopher Solzhenitsyn, where he documents essentially kind of the beginning of the Gulag system in the Soviet Union, and how people ended up in the gulags and how they were treated, and just seeing how freedom gets gradually restrained, and people are like boiling frogs, and then it's too late. And there are a lot of parallels between what happened back then and what is gradually happening in a lot of countries now.
Yeah, that's a first recommendation for here, but sounds like a very interesting one. So I'll have to add it to my list. Well, Ladisla, this has been great, and I really appreciate it you joining us. And I think we'll call it a show. Thank you so much.
Thank you, Keith.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.